Something massive is happening with Lloyds Bank in the UK. The share price has exploded and hitting its highest point in a year, and the markets are going crazy. But here's the big question. Is this a short-term hype, or are we witnessing the start of a serious comeback for one of Britain's biggest banks? In this video, we'll break down exactly what's pushing Lloyds upward, the hidden risks investors are talking about, and what it could mean for the future of UK banking. So grab your tea, this is getting interesting. Let's start with the facts. Lloyds Banking Group shares have climbed above 86p, up nearly 4% in a single day. One of the biggest moves on the FTSE 100. That might not sound like much, but for a banking giant like Lloyds, it's a serious shift. This rally comes right after new reports from the Financial Conduct Authority, the FCA, suggested that the cost of a major mis-selling scandal could be far lower than everyone feared. To understand why the stock is trending, you need to know what this scandal was about. For years, UK banks, including Lloyds, offered motor finance deals where hidden commissions were paid between lenders and car dealers. These were not clearly disclosed to customers. The FCA later called it unfair. Analysts estimated Lloyds might have to pay between $9 and $18 billion in compensation. But this week, new findings show it could be closer to $8.2 billion. That's billions less, and investors loved the news. In the world of banking, lower risk equals higher confidence, and that confidence pushed Lloyds shares through the roof. When Lloyds moved, it pulled the entire market with it. The FTSE 100 touched fresh highs, and other bank stocks like Barclays and HSBC followed the trend. It's not just traders jumping in. Retail investors, everyday people, are piling back into Lloyds. Why? Because they see it as one of the cheapest, most stable ways to ride the UK market recovery. And when optimism meets momentum, that's how trends explode online. Now let's talk numbers. Lloyds' market value sits around $55 billion, with a dividend yield above 5%. The bank remains one of the UK's most profitable, despite all the noise. Analysts are calling Lloyds a classic value stock. It's not a flashy tech firm, but it delivers steady returns, and the latest data shows improving loan growth, better cost control, and stronger customer deposits. Even with interest rates expected to fall slightly in 2025, Lloyds' margins remain healthier than most expected. But not everyone's celebrating. Some analysts warn this might just be a short-term bounce. The motor finance saga isn't fully over yet, and more claims could still come through in 2026. Plus, with the UK economy still shaky and the housing market slowing, Lloyds could face pressure on mortgage lending, its biggest income source. Experts are split. Some say Lloyds is now a recovery story that could touch 90p or even $1 by early next year. Others think the hype will fade once the legal dust settles. But one thing everyone agrees on: this week's rally proves investors are watching Lloyds closely again, and that makes it one of the most talked about stocks in the UK right now. So, what's your take? Is Lloyds truly back, or just bouncing before another drop? Drop your opinion below, and let's see who gets it right. If you love following UK market moves, smash that like button, subscribe, and hit the bell, because we've got more deep dives coming every week.